All right, on to materials or the sectors. Let's see. What do you got, Brandon?
Yeah, the sectors. Yeah. So I just wanted to go through, this is a performance of Q2. And as you'll see, the S&P 500 returned 8% for the quarter, which is crazy because that's essentially what you would get in your average year. What's interesting is that the sectors that led the way, real estate up 11.4%, technology up 10.6, communications up 10.2, healthcare up 10.1. So these are all non-cyclical and generally growth sectors. And when you look at the sectors that underperformed, financials, industrials, materials, and with the exception of consumer staples and utilities, because those trade like bonds, these are all cyclical sectors, one that you would expect to do poorly when there are declining bond yields and there's a shift from value to growth. So I think this really plays to the narrative, which we were talking about on the show, and just to say that we were really on top of this. And I think this continues going into the latter half of the year.
Wait, so just so I'm clear, like this was the previous 3 months, right?
Yeah, so this was the 3 months, June, May, April.
Wait, so that means during the previous 3 months, when everybody was pounding the media saying go into value, go into whatever, that those are the exact same sectors that are underperforming.
Yeah, exactly.
That's awesome. CNBC, people, that's where you get your news.
That's awesome.
Oh man.
Yeah, it's interesting because the cyclicals, I will say, they were market darlings in the first few quarters of 2021. The best performing sectors, I want to say, were like energy, financials. Energy still had a good quarter. It was like, what does that say? 8%?
Yeah.
But you have to keep in mind, like energy is very seasonal. Like it's the summer driving season, and like this is the time where you would expect energy to have a little bit of an uptick. I'm not particularly excited about energy, but if you look at the industrials, the materials, those are spaces I think I want to stay away from. I still have like some great companies in those spaces that I like, but would I necessarily want to be like overweight in materials or industrials or financials? Like, is Caterpillar a name that's really exciting me right now? Absolutely not.
You could see some major drags still from COVID, like industrials, like at airlines, negative 10%, almost negative 11%.
I think because they did so well in the first quarter.
That makes sense. Air freight, logistics, look at that. Home shopping, that's up.
Yeah, it's always interesting to look at the individual subsectors.
Yeah.
And I do really like this site, barchart.com. It's a really great resource.
I'm
Yeah,
gonna
I've
save
never
it. I didn't
seen
know
this
about it.
before. Have you seen this before, David, or no?
No.
The other thing that you can also do is you can find heat maps also. I'm not sure if you can go to the left panel, just where we can scroll besides S&P 500 index. Yeah, you could probably find like a heat map. And it's really cool because you can see all stocks in the S&P 500, just little boxes, either red or green. And if it's like dark green, it means it had like a really good day. Or yeah, so that's not the one I was looking for, but there's one that just has like in one square, just every single stock. It's just, it's really, really cool. Maybe I can show you guys after and we can pop it up on another episode, but heat maps are great and you can customize like the time frame. Like if you want to look at like the 1 year, the 5 year, the weekly, like it's great.
Ooh, alcohol down. What's the world gone to when alcohol's down?
Oh man, probably because weed's up.
Weed is not up. Weed has taken such a big hit this year. It is crazy.
Is it?
Yeah, it has. It's weird. You think it would have gone up with everybody sitting at home, but I guess not.
You know what? 2017, when all of those stocks went up, that basically like gave you all the gains for like the next like 5 or 10 years or however many years. Like they were just amortizing the gains. Like it's I'm not sure if you guys were a part of that. I was, and it was just crazy. Like Canopy was like beginning of 2016, it was like less than $1. And by the end of 2016, it was like a $17 stock. Went back down to like $5 or $6 the next summer. And then 1 year later was like a $70 stock. Now it's back at like 25. Like just crazy.